Over in the United States, the country's economy in the third quarter grew at its fastest pace in 2 years, driven by strong consumer spending and a sharp rebound in exports. U.S. President Donald Trump credited the rise to his tariff policies. Our Seung-jae has more.
According to an initial estimate released by the U.S. Commerce Department's Bureau of Economic Analysis on Wednesday, the U.S. economy expanded at a 4.3% annualized rate in the third quarter, its fastest pace since the third quarter of 2023. The growth rate significantly exceeded market expectations, as economists polled by Reuters had forecasted GDP growth of 3.3%. The stronger-than-expected performance was driven largely by resilient consumer spending. Household consumption rose at its fastest pace in nearly a year, as Americans spent more on recreational goods, vehicles, and international travel, underscoring continued demand despite elevated living costs. Exports also rebounded sharply, providing another major boost to economic growth. Business investment remained solid, with companies continuing to invest in equipment and artificial intelligence, reflecting confidence in long-term productivity gains. Government spending, particularly on defense, also contributed positively to GDP. Following the GDP report, U.S. President Donald Trump issued a public message linking the stronger growth figures to his trade policies. In a post on Truth Social, Trump stated that tariffs were responsible for what he described as great U.S. economic numbers, adding that the economy would continue to improve further. He also claimed inflation was absent and cited strong national security. Financial markets also responded positively to the economic data. U.S. stocks advanced, with the S&P 500 closing at a record high as investors reacted to the stronger growth outlook.
And so we see pretty much all the indices today being up on positive news, and the expectation that the economy is stronger than we're giving it credit for in the market at this point.
Economists say easing policy uncertainty, the impact of tax cuts, and recent monetary easing are expected to support stronger U.S. economic growth in 2026. Seung-jae, 아리랑뉴스.